So a positive day that has come through for the NSC. We're up around 0.8% on a monthly basis, gained around 3% or so. So positive momentum, and we're sitting above 3,300 points. Is this a key technical level that we need to watch out for?
Yes, basically, at least there has been some momentum that has come into the market, basically because of the good dividends companies are actually announcing and the fairly good results that are coming in from most counters. We are still not yet out of the woods in terms of sustained momentum to finish the year, or sustained momentum to reach us back to the pre-2008 heights of 5,000 marks and 5,000 points. So we're still a bit quite far away. If you also look at your moving averages, your 50-day, your exponential moving averages, then they're still also not giving a strong trend upwards. They're still rather flat. So this, for me, is just a mini bull trap that will fizzle out with time.
Give us an indication of what your expectations are when it comes to the interest rate environment. We've seen a slight drop in the inflation rate. We're sitting at around 16.7%, but this is still quite high. We're still well into double-digit territory, and when you see the month-on-month drops, they're not that significant. Do you think that the optimism is warranted?
No, not really. Again, if you look at the year-to-date figures as we move on, oil prices are up close to 14-15% global oil prices. So naturally, if you look at the disparity between the appreciation of the shilling and the appreciation of the commodities that the country actually imports inside, the Kenyan shilling is only appreciated by close to 4% year-to-date. Oil prices are up 15% year-to-date. Copper prices are up. Your sugar prices are up. We're all net importers of most of these things. You have your tea prices, which are down close to 14, 15, 16%, your coffee prices. So you're expecting reduced import revenues coming into the country, but your exports are going up. So with that picture in mind, any rate cut will actually be a bit premature.
Well, let's just touch on some of the corporate news out as well. We had Kenyan posting a 33% rise in year-on-year growth that came through for the first half of the year, and it seems that there's quite a lot of improvement coming through in hydrology and also commissioning 2 plants. Do you think that this momentum can be sustained? We're looking at fantastic growth levels.
I think they'll be able to sustain it for some time. They still have a number of projects that they have lined up for the second half of their year. And with the good rains that are projected to come in, again, they have a lower cost of production that comes in from hydro electricity. So yes, they might be able to sustain that growth rate going forward. And basically they are a utility, so and they have a monopoly on that other side of the market. So they should be able to sustain it.
No interim dividend that came through, a big focus on capex spend, but we saw quite a nice improvement in the overall margin number, sitting at 33% from around 27%. Again, with the capex spend that is going to come through, do you think that costs are going to increase and we might actually see a bit of pressure coming onto those margins?
The nice thing about it is, as much as they're going to spend a bit on capex, the projects that they're actually commissioning this year, they've actually spent the capex. So you will find there are projects that will actually start generating income by the time they finish, reach the end of the year or into their following year, which starts in June 2012. So it will have an impact on their bottom line in terms of how they're going to finance the capex. And if they retain the dividends, well and good, but I don't think there will still be enough to actually finance the capex that they need. There might be some form of borrowing somewhere, somehow. So basically the capex, yes, will affect the bottom line, but the projects they are commissioning this year will actually start contributing to their top line also.
Let's touch on Kenyan Market. We saw net profit up around 71% for the full year last year, and we also know that profits for 2010 came in at around 7.8% higher than the previous numbers that we saw. What is your sense on Kenyan Market? Because we also know that the company is declaring a dividend. It seems that it is putting a lot of optimism with regards to where the company is headed from here. So sentiment is high right now.
Yes, the geographical footprint and the geographical expansion is actually what is helping them a lot, though most of the revenue still comes from Kenya and basically from trading rather than retail and commercial. If you look again at the macroeconomic variables that the company is operating in, they had a huge hit on foreign exchange loss on their bottom line this year. Their interest expense was up because interest rates were high. So if you look at those two few indicators which will still be sustained in this year. They might not be able to sustain the 71% that we saw this year, but definitely growth will be there.
Let's also just touch on what we saw in the overall shilling space as well. We've had a much stronger Kenyan shilling. There is a strong anticipation that we could see a bit of negativity down the line. Reginald, how likely is this? I mean, given the fact that inflation is starting to come down, could be testament to the fact that the shilling is starting to play an impact on the overall inflation scenario as well.
True, but again, I still go back to the aspect of the shilling has only gone up by 4% vis-a-vis the all other aspects of oil going up by much higher, copper, and all the other things that we import. Truth be said, the shilling currently is it's called what we call makeup. It's being sustained at 82 because of mopping up liquidity and mopping up excess liquidity in the market and high interest rates.